Hello everyone, welcome to my online prep. Today we'll be studying chapter 25, that is business ethics, corporate governance and corporate social responsibility, a winning combination for organizational excellence. In this chapter, we'll be learning about business ethics, the various areas of business ethics, different theories developed in the business ethics field, characteristics of an ethical organization, corporate governance, shareholders primary, major best practices for improving corporate governance in an organization, the ethical issues faced in corporate governance, the concept of corporate social responsibility, various models of corporate social responsibility, and the Indian experience in the corporate social responsibility. So, let us start with the first topic. Stakeholders are going to trust the organization that runs on strong ethical principles and maximize their wealth. In this regard, we can say that the business is considered to be excellent if and only when the organizations win the trust of all the stakeholders involved. So, the basic responsibility of the business we can say is to ensure the safety as well as the higher rate of return on investment. For if we are talking about shareholders, so interest lies in participating in the management. The consumers, they determine what goods will be produced and what should be sold in the market or not. Herein, where the company works honestly and with fairness and accountability, it is to gain the trust of customers and all other stakeholders, which it helps to establish long-term relationship with the customers, consumers, as well as the employees of the organization, because the organization they want to retain the high worth employees who have greater talents and skills. This apart, it also has to market its products and services according to the different tastes, drives and purchasing power of the particular geography. So the organization, they need to inform the community about the organizational policies, activities and contributions towards the betterment of society. This altogether is known as the corporate social responsibility. So the social responsibility of the corporate towards the society, the consumers, all the stakeholders, it comes under the CSR. Here the concept of corporate governance is also important. Here it includes the rules, relationships between owners, managers, directors, the systems and processes, and within which the authorities exercise delegated. All of these things, they come under the corporate governance. Basically, we are monitoring the corporate working of the organization. So the organizational excellence is benchmarked on the basis of the triple bottom line, that is the profit, planet and the people. All of these together make up the corporate social responsibility. So in this chapter, we'll be studying about the importance of business ethics, CSR, and other means that make today's organizations trustworthy. First, let us start by understanding the meaning of business ethics. Ethics, in general terms, they are a set of principles or standards of human conduct that govern the behavior of individuals or the organizations. It deals with the morals and obligations of what is right and what is wrong. We can say that these are the morals and obligations. It can be defined as the discipline, that is dealing with the moral duties of individuals, how they are going to behave in a particular social surrounding or when they're interacting with other people. So we know that business is termed as the social organ. Therefore, it should not indulge in any activity that is harmful to the interest of all the stakeholders. So business ethics, if we see a definition, then given by Andrew Crane, business ethics is the study of business situations, activities, and decisions where the issues of right and wrong are addressed. For example, can greater profits be achieved but at the expense of the environment? So, this is a question of being morally correct or indulging in some harmful activity. So, we can say that business ethics refers to the code of conduct which businessmen are expected to follow when they are dealing with others. So the standards, principles, values, norms, all of these things, they come under business ethics. These rules, they enable a deeper understanding of what is good and bad, what is moral and immoral, or what actions are right and wrong when we are talking about a business operation. This is in respect to the customers, employees, investors, society, basically all of the stakeholders. The business, they want to protect them from destruction and damages to their interest. So these are the rules that business must accept and follow in its day-to-day operations for the welfare of the society and all of its stakeholders. So we can say that business ethics helps the business to maintain better and harmonious relationships with the society, customers, employees, and the concerned industry sector. Now let us see some of the critical characteristics of business ethics. First, it defines the code of conduct. Business ethics actually is the code of conduct which businessmen should follow while they're conducting their normal day-to-day activities or business activities. They are going to define the social, cultural, economic, legal, and other limits within which these businesses should operate. It protects social groups. Business ethic provides protection to all the social groups that are associated with it. It also instills healthy competition. The ethics, they promote practices that are healthy in coordination and cooperation with the business partners. They should in no manner try to create monopoly or exploit the resources. It reduces the risk and the cost, helps in improving the productivity and overall efficiency of the organization by bringing in self-discipline, aiming at reducing the risk and the expenses. It also helps monitor the business malpractices. It avoids adoption of unfair trade activities like adulteration, black marketing, frauds, cheating, etc. Controlling all of these malpractices by ethics helps in maintaining the legality of the business. It is based on moral and social values, well accepted moral or principal values, and it should not only focus on profitability or growth but also for the betterment of its stakeholders. So they include self control, service to the society, fair treatment to social groups, and not harm or exploit others. It also needs willing acceptance for enforcement. These are voluntary in nature and are not enforced by any law or statute or by force. So these ethics must be adopted like self-discipline by the businessmen at their own will and choice. It also ensures healthy employer-employee relations. Here, business ethics ensures that business should not operate for its own growth but also for the welfare of all its employees. The employees should be provided better and timely wages, salaries, proper working conditions, along with other amenities. Thus, implementation of ethics improves employer and employee relationships as well. It also helps in promoting long-term growth. Here, ethics in business focus on the survival of business organization for the long term. Businesses, they cannot exist for the long term if any of its operations they lead to exploitation for its stakeholders. So with the support of all its stakeholders, the businesses can touch the height of great success and can continue its operations for long term. Then it is not against profit making. Ethics in business, here they are not against profit making. However, it is against profiteering by cheating and exploiting the customers, employees, or the investors. So it supports the expansion of business activities, but by fair means and not through illegal activities or corrupt practices. It creates a good image for the organization by providing quality products at fair prices or serving, satisfying the customers in a better way. The reputation will increase, the overall goodwill of the business organization in the market would be enhanced. It is a relative concept, that is, it varies from business to business, organization to organization, even from country to country. So, business ethic that may be good or moral in one country may be treated as prohibited in other countries. Finally, it needs education and guidance for implementation. So, the businessman should be given proper education, guidance, and training, also motivated to how follow the ethical business practices. They should be motivated to implement these ethics by explaining their advantages. So these are the characteristics that also reflect the need of business ethics. Now, we have been using some terms like ethics, morals, and values. Let us try to understand the difference between these concepts. First, the difference between ethics and morals. Ethics is a moral philosophy, it is a wider connotation, while morals are mostly guided by culture and also has limited scope than the ethics. So, ethics has a wider scope. It tells us what is right or wrong. It can be said of as an integral part of the human society. So it is also known as moral philosophy. But morals, here when it comes to the acceptability, it only transcends to the norms that are laid down by the culture. It can be seen from the perspective of an individual. Then ethics lays the free will of the individual and gives enough room for the individual to deliberate upon different means and providing a moral justification, while morality can limit the scope of human deliberation in determining the goals and means towards the human needs. So, ethics are more willful. Here, they can be voluntarily accepted, while if the individuals do not follow morals or they show immoral behavior, it can lead to social ridicule. To be ethical, one should figure out what is right by applying some principles and considering the complexities. That is, there is flexibility of opinion in ethics, but by being moral, it is all about adhering to what is described by the society or religion. It is more stringent when we are talking about morals. A person whose morality is reflected in his willingness to do the right thing, even if it is the hard or dangerous thing to do, then it is called ethical. That is, even if some task is difficult, still the individual is wanting to do so, then it will be ethical. Whereas a person who knows the difference between right and wrong and chooses the right is moral. Now, ethics are moral values in action. Being ethical is an imperative because morality it protects life. When we are practicing the morals in real life, then we are being ethical. The morals they form part of the cultures which have to be ethical. To follow the ethical culture is relatively harder when we are comparing it to morals because it is less difficult than imbibing the ethical culture. Finally, ethics are philosophical deliberations that come up with the moral justification and principles that guide our moral values. But morals can be set off as a set of beliefs and practices that are considered what's understood as good and evil as given by the society or religion. So we can say that ethics is a much broader concept than morals. Then we have the difference between ethics and values. Values are things that have some intrinsic or internal worth in usefulness or importance. Moreover, values are what is considered as important by an individual or an organization. For example, courage, honesty, freedom. It determines what actions are best to do. Now, ethics is a generalized value system like avoiding discrimination in recruitment and adopting fair business practice. But values are more personal in nature, like a brief in providing customer satisfaction and being a good paymaster. So values are more personal, whereas ethics are general. Business ethics can provide the general guidelines within which the management can operate. Values, it offers alternatives to choose them. To illustrate, let's say philanthropy as a business policy is optional. Ethics helps us determine what is right or wrong. Values judge as to what is desirable and undesirable. Right or wrong is more of a clear justification, whereas values will tell us what is desirable, as in what is accepted, or what would be more, given more positive response, or what would be given a negative response. Ethics is all about reasoning as to how to do the right action, whereas values are mostly guided by the belief system of the individual or organization. Finally, ethics they constrain and hold back the individuals but values, they are seen to motivate the individual to judge between good and bad. So these are the main differences between the terms ethics, morals, and values. Ethics is a wider concept. Moral, they are more stringent as given by the particular culture or religion. Values are more personal. Next, we have the different vital areas where the organizations need to practice the business ethics. First, we have personal responsibilities. Every stakeholder or every person who is engaged in the organization have a personal responsibility. For example, the employees are expected to act responsibly and with honesty, diligence, punctuality, and willingness to perform the expected duties. Each person who works for the business, whether on the executive level or on the entry level, they will be expected to act with personal responsibility. A person who is occupying, let's say, a certain position should strictly follow certain norms and standards, like completing the assigned tasks, simply fulfilling the duties. So this comes under the personal responsibility. Then there is corporate responsibility. The organizations as separate legal entities also have certain morals and ethical responsibility and obligations towards their stakeholders. Some of these may be contractual or legal obligation, others may be promises like treating the business partners or individuals fairly with dignity and respect. Whatever these obligations are, the business has a responsibility to keep them. Then, social and environment responsibility. Organizations are a part of the society and they have to have a constructive role towards community, society, and the environmental safety. Many companies, they look for ways as to how they can give back to their communities through volunteer work or financial investment. So they will adopt measures to reduce waste and promote a safe and healthy environment. Therefore, the corporate social responsibility is a common practice where the businesses, they work towards environmental protection, social causes, and spreading awareness. Then technology ethics are also there because in the 21st century, technological advancements and innovations are very fast, and the organizations and businesses are being greatly impacted by such innovations. With information explosion, the organizations are widely using social media channels like WhatsApp, Facebook, email, Twitter as their official information channels. For that, they need to evolve a fair and transparent social media policy so that the technology ethics, they include customer privacy, personal information, and intellectual property fair practices. Then interpersonal and organizational loyalty is also there. Both businesses and their employees are expected to show loyalty. Employees should be loyal to their co-workers, managers, and the company. There should be mutual loyalty between a subordinate and a superior. If the superior is just, fair, and honest, then the subordinates will also trust them, be loyal to them. Then, mutual respect is important. Respect is an important business ethic, both in the way the business treats its clients, customers, and employees, also the way the employees, they treat one another. So, for this, respecting is important as to how individuals involved they treat each other. When we show respect to someone, that person feels like a valued member of the team or important customer. Transparency and trustworthiness. For this, business organizations should nurture trustworthiness to its client, customers, and employees through honesty, transparency, and reliability. Employees should feel they can trust the business. Clients and customers should be able to take or trust the business with their money, data, confidential information. So it will encourage the people to have a long-term relationship. And finally, fairness. When a business exercises fairness, that is treating every individual without any discrimination, it applies the same standards for the employees regardless of the rank. Also, the business will treat its customers with equal respect, offering the same goods and services to all based on the same terms. So all of these aspects are ultimately boiled down to people in the organization. As such, in building an ethical organization, here the HR also has a greater role to play. The HR, they have the responsibility involving a fair and transparent ethical code of conduct, also its dissemination and strict enforcement. We will also see further as to how the organizations can improve on their business ethics. Next, let us see some of the important theories given in the field of business ethics. Several theories have been developed to cover issues that are related to business ethics. Under this, first is John Stuart Mill's utilitarian theory. This is the first ethical system in the normative ethics that is also known as the concept of the greatest good for the greatest number, that is providing utility or satisfaction to the largest number of people. Herein, John Stuart Mill defines utilitarianism as a theory based on the principle that actions are right in the proportion as they tend to promote happiness, wrong as they tend to promote the reverse of happiness. That is, any action that is going to lead to more happiness to the people involved is going to be a moral or ethical action. So, Mill defines happiness as pleasure and absence of pain. So conceptually, we can say that utilitarianism theory argues that right action is the one that produces more utility or more usefulness as compared to some other action. But it does not mean that the right action is the one that produces the most utility for the person who performs the action. It should provide satisfaction to the others. On the contrary, John Mill advocated that an action is right if it produces most utility for all the persons that are affected by the action. Herein, this theory focuses on the quality of actions as propagated by the deontological theory, that is the duty based and non-consequential. We'll study about this theory further. Here, the third process is that ethical decisions are made based on the consequences of the action, which is why it is also sometimes called as consequentialism. So, the quality of actions that are focused under John Stuart Mill's theory is based on how it is going to affect the people involved. So, this theory posits that individuals should strive not for their own happiness but also for the happiness of the society, as human beings are by nature social beings. So, this theory leads to the inevitable conclusion that morality requires the agent to impartially take into account everyone's interest equally. So, this theory promotes that whether we are talking about the HR or the managers, they need to take actions that is going to benefit all of the stakeholders. So, we can say that this theory leads to the conclusion that while assessing the usefulness of utilitarianism in the organization context, it should be understood that it provides standards for a policy action. That is, if it promotes the welfare of all more than any other alternative, then it is good. If it provides maximum satisfaction or maximum utility to the maximum possible people. Secondly, it also provides an objective means of resolving conflicts of self-interest with the action for common good. We should not focus on only ourselves. We should also focus on a solution that is going to mutually provide satisfaction to all of the people involved in conflict. Thirdly, the theory provides a flexible, result-oriented approach to ethical or moral decision making. So, however, this theory also has certain demerits. First, measurement of utility is a different task because there are no means to measure it, as utility is a psychological concept. It is highly subjective. One person might get more satisfaction, other might not. It differs from person to person and time to time. Then, how we can measure this problem here dealing with certain benefits and costs is not possible. For example, the measurement of value of life or health is impossible. There is also a lack of predictability of benefits and costs. If they cannot be predicted, then we cannot also measure it properly. Finally, there is a lack of clarity in defining what constitutes benefits and what comes under cost. This lack of clarity creates problems, especially with respect to the social issues that are given different interpretations by different social or cultural groups. The second prominent concept, deontological ethics, was given by Immanuel Kant, according to whom importance is given to the will. Will is the only qualified good. By will, Kant means that unique human capacity is there to act from principle. Kant said that for an action to be morally good or worth, it should reflect a good will or a good intention, if we say in similar terms. So, contained in the notion of goodwill is the concept of duty. Only when we can act from duty does our action have moral worth. This is why his theory is also known as the ethics of duty. One, if performs the respective duty with proper fairness and without discrimination, then we can say that they are promoting goodwill and ultimately ethical behavior. So, the basic principle is that human beings should be treated with dignity and respect because they too have rights. So, ethics based on reason alone and not on human nature, this is given by Kant. That is, reason alone on the basis of reasonability, that he has emphasized the basics of ethics are those moral actions that are taken by a sense of duty and dictated by a reason. So the imperatives of morality are not hypothetical but categorical. He advocates that an action has moral worth only when it is done from a sense of duty. So reason, we can say, is the final authority for morality, and blind beliefs or rituals, they cannot be the foundation of morality. He has emphasized the basis of ethics whose moral actions are taken by sense of duty and dedicated by reason. On the positive side, we can say that this theory has adequate relevance to the business organization and benefits in decision making. Here, theories of egoism, or the earlier when we learned the utilitarianism, human is considered as a means to achieve the result, whereas Kant has given more importance to the individuals, their own understanding, their willingness to perform their duty. But there are certain limitations of this theory also. First, there are no solutions offered in the theory as to how we can resolve conflict if they arise when there is no agreement about the principles involved in the decision. Then it is not correct to assume that the implications of making a right choice will always have the good consequences. It can also sometimes yield bad consequences. Finally, the theory is not clear as to what decision should be made when the duties conflict. That is, if the individual has duty towards their office but also towards their home or family, then this leads to a situation of conflict. All of these come under the demerits of Immanuel Kant's deontological theory. Next, we have Aristotle's virtue theory. It basically says that ethical behavior is the integrity of individuals' character. Virtue is the quest to understand and live a life of moral character. This theory is based on the premise that different goals can be achieved only if people they possess self love. So herein individual will be able to reach their full human potential of having a sense of well-being and joy only when they have enough self-love. So this character-based approach of morality, it assumes that we acquire virtue through practices. So virtue ethics, they help us understand what it means to be a virtuous human being, such as practicing honesty, habits, or temperance, courage, justice. People will show virtuous behavior, and it gives us a guide for life without giving us specific rules, only guidance is provided. Herein, Aristotle defines the supreme good as the activity of rational soul in accordance with the virtue. Only human beings and animals, they have a rational soul. They are dealing with the society with emotions. Since our rationality is a distinctive activity, its exercise is the supreme good. So, moral virtue is a disposition to behave in the right manner as a mean between extremes and deficiency and axes which are wiser. So, we can only be held responsible for actions we perform voluntarily and not for cases involving physical compulsion or avoidance or ignorance. Only when people they learn particular virtues can be said of as having integrity. Now, this theory also faces certain challenges that are similar to Kant's theory. Herein, if a virtue of loyalty to a client or honesty to the people, what will happen when they conflict? This is the first problem to which one should be a professional differ, how we can differ between two choices if they're giving us conflict. So these are some of the challenges even this theory faces. Next, we have the characteristics of an ethical organization. Institutional culture, it is going to reflect the core values of the organization and it forms the very basis of how people they work together in the organization. Herein, Mark J. Paston, who served as the president of Council of Ethical Organizations since 1988, in his book titled The Hard Problems of Management, Gaining the Ethical Edge, provides the following characteristics. Here for you is important to remember who has given these characteristics and the name of his book. First characteristic, ethical organizations are at ease interacting with diverse internal and external stakeholder groups. Its ground rules encompasses the good of its stakeholders, part of the organization's own good. Then ethical organizations are passionate with fairness. Again, their ground rules they emphasize that the other person's interests count as much as their own. Responsibility in individual phenomena rather than collective, with individuals assuming personal responsibility for actions of the organization. Then, ethical organizations always view their actions in terms of its purpose. The purpose is a way of operating that the members' organization they highly value. So, purpose connects the organization to the environment. And finally, these organizations will have a clear communication channel and they will possess minimized hierarchical ties, thereby effective control paves way for sound ethical practices. So these are all the characteristics that if an organization is following the ethics, they are going to show these features. Next topic is corporate governance. Now, gone are the days where the companies or organizations were only concerned as the profit making entities with no obligation towards the society. Today, an organization is not just a business entity whose only work is to do business, but also they are looked upon as entity whose duty is to serve the society. Here comes the concept of corporate governance. In simple terms, corporate governance means carrying the business as per the stakeholders' desire. It is actually conducted by the board of directors and the concerned committees for the company's stakeholders' benefits or their desires. So, it is a technique by which the companies are directed and managed. It means carrying the business as per the stakeholders' wishes. So, in the wider context, we can say it is the interaction between the various participants, such as the shareholders, the board of directors, company's management. It represents the value framework, the ethical framework, and the moral framework under which the business decisions are made. Also, it helps us determining ways to take effective strategic decisions. Now, in today's market oriented economy, the need for corporate governance is a felt imperative because efficiency and globalization these are significant factors that necessitates a good corporate governance. So, corporate governance is going to ensure transparency, strong and balanced economic development. This also ensures that the interest of all the shareholders are safeguarded. So, the role of board of directors is very important in corporate governance. It is essential to develop added value to the stakeholders and all the people involved for economic development. It also ensures that the shareholders they fully exercise their rights and the organization they fully recognize their rights. Corporate governance basically encourages a trustworthy, moral as well as ethical environment. So meaning of corporate governance is clear, that is basically creating a sense of ethics that treats all the stakeholders fairly. Now, what is the need and the strategies that can be taken to nurture good corporative governance in an organization. In the recent past, the term governance and good governance, they are being increasingly used in the context of corporate governance. So, experiences of different organizations testify that good corporates are not born but are made by the combined efforts of all the stakeholders: the shareholders, board of directors, employees, customers, clients, and the society as a large. When all of them are ready to take steps to make it a good corporate, then the corporates are made. It is also a fact that laws, statutes, and regulations, they cannot bring positive changes in the behavior of the people. They should be willingly trying to support all these activities. So all the stakeholders have a vital role to play. A good corporate governance is definitely important because it helps ensuring long-term shareholder value. We have already seen what all benefits it provides. Now, generally, the organizations achieve good corporate governance by ensuring that the board of directors, they follow the four P's of corporate governance. First is the people. People are going to determine the purpose to work towards the development process, how to achieve it, how to evaluate the performance outcomes. Then we have purpose. Every piece of governance exists for a purpose, bringing the company closer to achieving its mission statement. Then we have the process. People achieve the company's purpose through the process. And finally, performance. It is we are going in the right direction or not, if there are any gaps between the desired objectives and the achieved objectives. So the processes are evaluated through the performance to determine success. Then, adhering to the basic principles of corporate governance is important. Herein, there should be accountability of leadership, participation by all who matter in the governance, consensus oriented majority should be there, transparency, responsive to all the stakeholders, documentation. Basically, all of these things they come under corporate governance. Implement the company's governance strategy fairly and strategically, and finally balance the interest of the company stakeholders. That is, no one particular category should be given more benefit, rather all the shareholders, senior management, executives, community, they should be provided or their interests should be taken care of. Now, as discussed above, one of the basic features of a good corporate governance is transparency, that is being transparent and ethical. Now we will see the major best practices for corporate governance that can be followed. Also, they come under the sole responsibility of the board of directors. First, important is to recognize that good governance is not just about compliance but also about the performance. So the board needs to acknowledge the fact that the basic ingredient of good governance is not only to ensure compliance of the laid down rules but also the regulations, the code of conduct to improve the performance of the organization. So, herein, as a part of the process, a board needs to elaborate its position and understanding of the major functions it performs as opposed those that are performed by the management. So, the board has a significant role to play in the formulation and adoption of the organization's strategic decision. Knowing the role of the board and who does what in relation to the governance will create more harmonious relationship between the board and the management. Then building a robust board of directors is important. The board should encompass directors that have the right qualification, expertise, competence, knowledge that is relevant to this field. They should also have strong ethics and integrity with diverse backgrounds and skills. The gap or vacancies of the directors that is created by retirement should be filled up as soon as possible and in the most transparent manner. Then defining the roles and responsibilities clearly and unambiguously. Organization for this should evolve and put in place a transparent, fair, and clear patterns of role, responsibility, and accountability, or the board chairperson, the executive officers, so that there's no conflict of power and authority. Next, ensuring to provide necessary factual information to the directors. For this, qualitative and factual information is the cornerstone for taking better decisions. Generally, regular board agendas are discussed, details are given to the chairperson, but directors they do not have the same information. So, briefings, presentations, site visits, individual director programs, and so on, these can help provide directors with additional information. Above all, directors they need to be able to find answers to the questions they have, so an access to independent professional advice policy is also recommended. Next, emphasizing on maintaining integrity and ethical dealings. Besides declaring the conflicts of interest, the directors should also ensure a culture of integrity in the business dealing and of respect and compliance with laws and policies. So, to create and cultivate this culture, the organization should evolve and adopt a conflict of interest policy, a whistleblower policy, a code of business conduct that is going to help us dealing and how we are going to provide more compliance with the laws. Finally, recognizing that the governance of risk is the responsibility of the board of directors. Establishing a sound system of risk oversight and management and internal control is another fundamental role of the board. Organizations for this should regularly identify and assess the risk that they are facing. It includes financial, operational, reputational, environmental, industry related, and the legal risk. So, the responsibility and accountability for maintaining risk effectively comes under the board. Despite the importance given to good governance or importance to morals, it is quite unfortunate that the business environment, especially in India, is replete with unethical practices. There are found cases of bribery, corruption, insider trading, etc. All of the people involved, like employees, customers, government, there are cases of corruption and bribery. For example, in the Indian context, the big corporate scandals like Harshad Mehta scam, etc., have made the government of India and the corporate sector to lay more emphasis on imbibing values in their business policies and operations. Here, the ethical climate in any business organization largely depends on three factors. First, the individual's sense of value. Second, the social values accepted by the business and the industry. These are, for example, set up by reputed institutions like ICAI, etc., as well as the system. Under this, while the first two factors are relatively easy to achieve, the third one, that is the system, is the most decisive factor where the corporate faces the major challenge. Now, going by the lessons that are learned out of the bid scams and the scandals, the corporate world has experienced to usher an area of better and effective corporate governance in the country. Now, the focus has to be turned effectively on creating a climate of public governance and making needed changes or modification in the various laws and the regulations. Some of the business tycoons have also explained the term ethical behavior as putting the interest of the company above that of one's personal interest in all the transaction. It also includes certain attributes like transparency, fairness, thinking strategically. So, it may be noted that corporate governance can be seen as a combination of trust, transparency, ethics, values, and other such characteristics. In this regard, Government of India has since put up in place various laws as well as stringent mechanisms for the enforcement of an effective corporate governance, ably endowed with ethics and moral values. Now let us see what is corporate social responsibility and its situation in India. We have already seen in the previous discussions that the concept of CSR is from the view that organizations are now a part of the society. They're not working in isolation, but they know that they have impact on the social lives of the people involved. So, World Business Council for Sustainable Development defines corporate social responsibility as the continuing commitment made by the business to behave ethically and contribute to economic development, while improving the quality of life at the workplace and their families, as well as the local community and society at large. So, corporate social responsibility, it is the management concept where the companies they integrate social and environmental concerns in their business operations. It is generally understood as creating a balance of environment, society, as well as the business operations so that benefit of all the stakeholders can be maintained. In this, some of the chief advantages of corporate social responsibility approach are given. First, it improves the financial performance of the concerned entity because more trust is there, better image in the marketplace is created. It enhances the brand image and reputation of the company. It also increases the sales volume and customer loyalty. Long-term customer relationship is formed. It enhances the ability of the company to attract and retain key talents. That is, if the employees they are satisfied with the working conditions, payroll, incentives, they are going to stay in the organization for long. It enables reduced regulatory oversight. It also instills a sense of creativity, innovation, and learning new horizons of knowledge. And finally, it makes the risk management endeavors more robust. So we can say that leading practitioners of CSR, they believe that it is an integral part of wealth creation process and that it should enhance competitiveness of business and help the company in times of crisis. There are various models of corporate social responsibility that are based on different outlooks. Some experts they classify models that are based on philanthropy, some others classify as business strategy. But out of all the models of CSR, a popular four models have been envisioned by Carroll. This is known as Carroll's CSR pyramid and the four model framework. Let us examine the concept. Literature on modern definition of corporate social responsibilities is rooted in the work that led to Archie Carroll's pyramid. This is a four-part definition that was originally published by him in 1979. So in this pyramid, four different definitions are given that all together reflect corporate social responsibility. Herein, CSR refers to the business behavior that is economically profitable. It complies with the law, is ethical, and is socially supported. So these are the four definitions given of corporate social responsibility. There is the economic responsibility, legal responsibility, then we have ethical responsibility, and finally philanthropic responsibility. The goal of the pyramid was to illustrate the building block character of the four-part framework. So it is moving in a upward direction. The lowermost is economic responsibility. That is the basic requirement of existence for the businesses. That is profit. Because organizations they want to invest further, they want to make profit for their very existence, and they have an economic responsibility to the society that permitted them to be created and sustained. So companies that adopt manufacturing processes to be able to use recycled products and lower material cost. These are examples of economically responsible companies. So they are making economic use, better use of all the available resources. This benefits society in increased profitability, reduced ecological footprint, etc. So this is the lowermost level, that is economic responsibility. Second layer of the CSR pyramid is the legal obligation or the legal responsibility. The companies have to comply with the laws and the regulation. Here, the businesses are expected to comply with these laws and regulations as a condition of operating. It is for this reason only that the concept of compliance officers has been mandated in all the organizations. They have been assigned senior position in the organization because there is importance of responsibility. They need to see that the organization is complying with the laws and the regulations. These legislators are national, regional, and on local levels. So they have provided codified ethics that have to be followed. For example, operating in a consistent way in accordance with the government requirement. complying with different national and local regulations, behaving as loyal state and company citizens, etc. So these are the legal obligations. Then we have ethical responsibility at the third level. It means that the business embrace activities, standards, and practices that haven't been written down but are still expected. We have seen what is the meaning of ethics. It also means that the business will conduct their efforts in a fair and objective manner. Even those cases where laws do not provide guidance, they need to behave in an ethical manner. They should be fair. Also, the ethical responsibilities, activities, standards, policies, all of the goals and expectation is that the business will be responsible and responsive to the full range of norms, standards, values, and principles, like performing in a way that is consistent with the society's expectation, recognizing and respecting new or evolving ethical moral standards, preventing ethical standards from being infringed. So, all of these come under the ethical responsibility. Finally, at the highermost level of the pyramid, we have the philanthropic responsibility. It is guided by the business desire to participate in social activities that are not mandated by the law or not required, not generally expected of business in an ethical sense. This means that the businesses they give partially out to an ethical motivation, that is they want to do what is right for the society. This can be a small scale sponsoring of a local non-profit annual fundraiser or donating a certain percentage of business annual earnings to a prominent cause. So all of these things come under the philanthropic responsibility. So we can say that the four model CSR definition forms a conceptual framework. It includes the aspects like economic, legal, ethical, and philanthropic. Here the society, how the business are given importance to the society. While understanding each type of responsibility, it can be said that economic responsibility is required. Without profit, organization cannot move forward. Then legal responsibility is also required because these are the laid down terms important to follow. Ethical is expected. It is the behavior expected of the business by the society, and also philanthropic responsibility is expected or desired of the business by society. So this is the four model framework given by Carroll. Here in this pyramid at the lowermost is economic responsibility, that refers to be profitable, the foundation upon which all the others rest. Second level is the legal responsibilities, which means to obey the law. Law is society's codification of right and wrong, so we should play by the rules of the game. Ethical responsibility is the third level. Being ethical means obligation to do what is right, just, and fair. Again, play by the rules of the game. And finally, we reach the fourth or the highest level, that is the philanthropic responsibilities, that is to be a good corporate citizen, contribute resources to the community, improve the quality of life. So, this is the pyramid as given by Kerala. Now we will see corporate social responsibility in the Indian context. Now, world over, the concept of CSR has gained increased significance in the recent years. But if we are talking specifically about India, so in the oldest forms, CSR in India included the concept of corporate philanthropy and the Gandhian trusteeship model. But now, with liberalization of the Indian economy, it has led to a fundamental shift from the philanthropy model to a multi-stakeholder approach. We have already discussed this. Multi-stakeholder means that CSR is integrated to a sustainable business strategy. That is all the financial stakeholders, employees, community. In this, in addition to the above, mandatory provisions are also created in the Indian Companies Act. They have provided impetus to this concept, according to which the corporate need to compulsorily spend a certain percentage of their profit towards the CSR activity. Now, under an act, that is the Indian Companies Act, a schedule has been added. The companies, out of their total percentage of profit, they have to contribute to these CSR activity. This has been given by the government. This apart, the Indian industry is also equally aggressive in its drive to bring socially responsible. A large number of Indian corporate discharge their social responsibilities quite satisfactorily. There are many companies who have excelled in such activities because the money they spend for social causes is generally a significant portion of their turnover. Nonetheless, even though these steps are seen, when viewed such large spending in the light of countries' vast social needs, the achievements they look short of requirements. That is, even though corporate social responsibility is gaining or is increasing its importance, still not all the companies are contributing towards it equally. Now, let us see the mandated provisions under the Indian laws for the corporate social responsibility. We have seen that under the Companies Act of 2013, a section 135 has been introduced. With this, India has emerged the first country to mandate and quantify the expenditure under the head corporate social responsibility activities. So now India has made it mandatory for all the companies to contribute to CSR activities. Schedule 7 of the Act places the community at the heart of the activities, that is providing or paying back to the community. The act requires companies with a net worth of rupees 500 crores or a turnover of rupees 1000 crores or a net profit of rupees 5 crores during the immediately preceding financial year. They need to spend 2% of their average net profits of the immediately preceding 3 years on CSR activities. That is, this category of companies, they need to spend 2% of their net profits on the corporate social responsibility activities. It also enumerates the activities that can be undertaken and the manner in which the companies they can undertake these programs. Having regard to the fact that CSR expenses have philanthropic nature and are not wholly or exclusively in the nature of business expenses, Parliament has also legislated that it would not be eligible for deduction under the Section 37 of Income Tax Act. It was explained that the objective of CSR is to share the burden of the government in providing social services by companies having net worth or turnover over a threshold level. So, Parliament has said that these companies who are contributing to the CSR activities, they are playing a part of government, they are helping the government. So these activities would not be eligible for deduction under the Income Tax Act. It was also clarified by the Ministry of Corporate Affairs of the Government of India that while no specific tax exemption has been extended to the expenditure incurred on CSR, spending on several activities like contribution to the Prime Minister's Relief Fund, scientific research that is conducted, skill development program, agriculture extension programs, etc., that are specifically mentioned in the Schedule 7, they already enjoy exemptions under different sections of the Income Tax Act. So, to provide these companies more motivation to contribute to the CSR activities, these provisions have been provided. Additionally, the memorandum explaining the provisions of Financial Bill 2014 also brings out that the CSR expenditure that is explained in section 30 to 36 shall be allowed as deduction under those sections that are subject to fulfillment of conditions. So now, after the Finance Bill of 2014, allowed as deduction section has also been added. Therefore, we can say that the expense in the nature of CSR may be claimed as deduction under sections like 35 AC of the Income Tax Act if the conditions are met. Further, section 80G clearly prescribes only two instances, that is contribution towards Swachh Bharat Kosh and Clean Ganga Fund, in respect of which deduction is not permissible. So basically we can contribute or conclude that various mandates have been made or it has been made mandatory under the Indian laws for the companies to contribute towards the corporate social responsibility. Finally, if we want to say what is the future of the CSR approach, it will become more considerate. The companies would be embracing the policies and activities will be involved more in the CSR. Then they would view CSR as a critical tool to protect their company's reputation in difficult times, to have a positive light in the eyes of the people. There will be more realization because the CSR concept cannot be a successful venture until they adopt the multi-stakeholder approach. They need to focus on the emphasis of the employees at large. Another aspect is that now the companies or economies are adopting the public-private partnership. Herein, the private sectors or the corporate sector is also contributing towards the government activities. It is a much needed infusion that the government is getting today. So, Indian context, such a thought process is greatly expected to bear fruitful results. Thereby, corporate sector will adopt the PPP model of CSR in the days to come. With this, we have reached the end of this lesson. Keep learning with us. Thank you.